This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices fell over 1% on Tuesday as OPEC+'s decision to pause output hikes in the first quarter next year, along with weak manufacturing data and a stronger dollar, weighed on the market. Brent crude futures fell 90 cents, or 1.4%, to $63.99 a barrel by 10:56 GMT. U.S. West Texas Intermediate crude was down 95 cents, or around 1.6%, at $60.10 a barrel. The succession of poor manufacturing PMIs from Asia and then the U.S. ISM is a worry for oil demand. So is the ever-present market-upsetting tariff threat, said John Evans, analyst at PVM Oil Associates.
Shipping rates for liquefied natural gas have hit multi-month highs on tighter vessel availability, delayed cargo deliveries to Egypt and rising demand ahead of winter, shipping sources said. The price gains amplify competition for available LNG carriers, reversing the trend of lackluster shipping rates seen for much of this year. Prices tumbled to 5-year lows in February as fleet additions outpaced demand, though they jumped to an 8-month top in June on tighter vessel supply and as the Israel-Iran conflict led shipowners to hold off chartering vessels.
Moving on to the top news in the energy sector.
A major fuel supplier in Turkey has told its wholesale customers it will raise diesel prices after Western sanctions on Russian oil companies led to supply issues and increased insurance and financing costs, according to a document seen by Reuters. Turkey is highly dependent on diesel supply from Russia and has been the top importer of Russian diesel since 2022, when Western countries shunned Russian oil due to Moscow's invasion of Ukraine. Turkish fuel supplier Güzel Enerji, owned by the country's army pension fund OYEK, raised wholesale diesel prices as of November 3, citing sanctions imposed by the U.S. against Russian oil majors Lukoil and Rosneft on October 22, according to a letter sent to its customers seen by Reuters.
Venezuela's oil exports declined 26% to some 808,000 barrels per day in October as the country's stocks dwindled and it imported smaller volumes of diluents to produce exportable crude grades, according to shipping data and documents from state firm PDVSA. The OPEC countries' exports had reached a 5-year high in September after being boosted by stable crude production of around 1.1 million barrels of oil per day and robust imports of light crude and naphtha, especially from Russia, earlier in the year to dilute its extra heavy oil output. However, imports fell to around 41,000 barrels of oil per day in September and 73,500 barrels of oil per day in October, below the 105,000 to 110,000 barrels of oil per day registered in the first 2 quarters of the year, knocking down PDVSA's inventories of diluents and blend crudes. Next, we have the top news in metal markets. Copper fell for a 4th straight session on Tuesday, sinking to its lowest in almost 2 weeks as the dollar strengthened and demand concerns mounted after last week's run to a record high. Benchmark 3-month copper on the London Metal Exchange fell 2.4% to $10,624 a metric ton in official open outcry trading. It touched $10,577.50, the lowest since October 22 and more than 5% off its all-time peak of $11,200 on October 29. The pullback showed current fundamentals not being strong enough to sustain higher prices at this time, and the reversal forced recent wrong-footed longs to surrender, said Ole Hansen, head of commodity strategy at Saxo Bank.
Iron ore futures eased on Tuesday, extending losses into a 3rd consecutive session, as slowing factory activity and weak steel demand in top consumer China weighed on market sentiment. The most traded January iron ore contract on China's Dalian Commodity Exchange was down 1.71% at 775 yuan and 50 fen, $108.87, a metric ton. The benchmark December iron ore on the Singapore Exchange lost 1.19% to $103.80 a ton, as of 0703 GMT.
We will now look at the top news in the agricultural sector.
Chicago soybeans fell on Tuesday, retreating from a 16-month high hit in the previous session, while traders awaited further Chinese purchases of U.S. cargoes following last week's talks and a thaw in trade relations between the two countries. Wheat gained more ground, hitting its highest in more than 3 months, while corn slid. The most active soybean contract on the Chicago Board of Trade fell 0.4% to $11.30 minus 1/4 a bushel as of 0316 GMT, having climbed to its highest since June 2024 on Monday.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.